For more on reaction on today's economic reports, let's go to David Resler, chief economist at Nomura Securities and a Bloomberg best forecaster. He joins us from his firm here in New York. David, welcome back to Bloomberg. Always good to have you on.
Good to be here, Mark.
As Michael was just mentioning about what was going on with the CPI, the core rate, it rose 0.2%, and that was the biggest gain since October of '09. Are we going to see companies starting to pass the higher cost on to consumers?
I don't think so. I think if you look behind the increase in the core, and it was a surprise, we were surprised by it, it traces almost entirely to the 1% jump in seasonally adjusted apparel prices. If you look at apparel prices historically, you find that there are these periodic spikes followed by declines. I don't make much of a 1-month jump in apparel prices. Compared to a year ago, apparel prices are exactly the same. And in fact, if we looked at the unadjusted prices, if you actually bought clothes, you paid less for them in January than you did in December.
Right.
You should have paid much more or less. But you know, I think that there's probably what that tells us is that retailers ended the holiday season with a leaner inventory, and they didn't need to cut prices as much as they had a year ago.
Well, David, as far as apparel and clothing are concerned, is that all about China and the rising cost of cotton?
Maybe eventually the trend there might be, but this 1-month change, I think, has a lot more to do with retail inventories at the end of the holiday season, and is probably a purely transitory event. You look through the rest of the CPI components, there's not much evidence of any kind of price pressures. Now, Mike had mentioned earlier that we're seeing some pressure or some stabilization of rents on houses, on primary residence and the so-called owner's equivalent rent.
Right.
We view that as a positive. It to me is telling me that we're finally seeing signs of stabilization in the housing market that's enabling landlords and property owners to extract a little bit more rent for their properties than they were a year ago when they had to cut rents. So I think that's a good news.
David, applications for jobless benefits, we did see those increase by 25,000 to 410,000. That was for the weekend of February 12th. That median forecast of economists surveyed by Bloomberg was 400,000. Enough to be encouraged, but not enough to make a real dent. Do you have a sense that we're starting to build momentum that can be sustained through this year?
Toward lower jobless claims?
Yeah.
Yes, absolutely. I think that the job market is improving decidedly, and we're going to see more evidence of that once we get through this kind of noise that we get from the winter weather. I think the noise was a big factor in the weak non-farm payroll report in January, and I wouldn't be surprised to see an increase in the 200,000 range, 200+ thousand range when we get the February numbers.
But David, still another report showing consumer confidence last week holding near a 2-month low. Americans getting the sense that even when they can't find work, food and energy prices are on the rise. Is that what's fueling the pessimism?
Yeah, well, consumers are very sensitive to those things, and as well they should be. I mean, every time you go to the gas station, it takes a few more bucks out of your wallet to fill the tank.
Right.
That leaves a little less for your trip to McDonald's. So.
David, as Michael McKee also mentioned, he was saying that some analysts expressing concerns that the Fed might fall behind the inflation curve. Is that a concern?
It could be a concern for some people. I don't see it as a very likely risk in the near term. We've got an unemployment rate that's still at 9%. We think it's going to come down by 0.5% or more in the coming year, and I think that's the same that the Fed expects. And maybe by the end of 2012, we'll be down in the low 8s or high 7s on the unemployment rate. That's not enough to be generating wage pressures, unless, of course, you get these kind of what I would call bottleneck effects caused by spot shortages of particular skill sets that you can't get, and that could translate into somewhat higher wage pressures. But we're a long way from seeing that.
All right, David, we're going to have to leave it there. David Resler, chief economist, Nomura Securities, a Bloomberg best forecasters. Thanks so much.